All right, here we are now in the studio because it's getting dark here in Mumbai. And you know, my producer's that Sandy Canold. He wanted me to say it's the mosquito capital of the world. I have to say, Sandy, that honor, I believe, goes to Delhi, India. But Mumbai is the financial capital of India. That's why we're here. And it's also home of India's largest private lender. That's ICICI Bank. Mark may remember we met the CEO recently in New York because he's opening a branch there. Bottom line, though, that bank, like so many around the world, has been hit by the credit crisis. And in fact, some of the charges they've taken have hurt shares so far this year, which are down about 30% when you look at how they're trading here. Joining us now, Rakesh Chahai is the Deputy CFO of ICICI Bank, and it's wonderful to have you with us, Rakesh. Appreciate your taking the time out of your evening. I wanted to get the latest sense from you because we're talking so much about the Indian growth opportunity. There might be no better example of how tied into the global economy India is, though, than the credit crisis. India's biggest bank, and you've taken a hit. Are things getting better at all from your perspective?
See, from the credit crisis point of view, the hit that we have taken has basically come from the mark-to-market on some of our investments. You know, we have some investments in credit derivatives, which are underlying about 2/3 is Indian corporates, balances, Asian, European, and American corporates. So we've taken a mark-to-market on that. It's not really an actual loss that we have incurred. So other than that mark-to-market, we don't think it is having a significant impact on our operations. There is some impact of the lack of liquidity in the global markets today. So our ability to raise, bonds in the global market has been impacted. But if you leave that aside, in terms of our core business, any of our India-linked businesses or overseas business, there is no impact that we are seeing in the actual business operations.
So how is business in India right now? Because I talked to the finance minister the other day, and he said, for the first time, I think, look, 8% plus, we're sticking with that. India's economy is not going to slow down much this year. You're the one, though, that's the biggest car lender, the biggest home lender in this country. Is that true?
See, in terms of the overall GDP growth, our estimate is also that for the year ending March 2009, which is the next financial year, should be in the region of 8 to 8.5%. Within that, the retail segment that you talked about is clearly seeing a significant slowdown. The retail segment was growing at 30% plus for the last 3 or 4 years. Last year, it grew at about 15%. And the higher interest rates, if you look at the last 24 months, the interest rates in the system have gone up by about 3 to 4%. That has impacted the affordability from the customer point of view. So the retail loan growth has slowed down, but overall loan growth is still running at about 20% for the system, driven largely by the corporate side. And we are not seeing any signs of slowdown either in terms of the overseas acquisitions being made by Indian corporates or the deals in pipeline there, or in terms of the local investments being made by Indian corporates. So,
and ICICI Bank, in a few years when we look at it, what is it going to be? I mean, is the goal of ICICI, you have a branch in New York, is it to be Citigroup or HSBC?
I think it is to be ICICI Group. We don't, we think we have our own unique strategy. In terms of our global presence, it will largely be linked to India opportunities, that is, linked to the Indian corporates, participating in the overseas acquisitions that they are making as their preferred financial advisor. And in terms of developing a syndication franchise where we are able to syndicate all our loans, either in UK, Asia, or US.
All right, well, Rakesh, thank you so much. Appreciate your taking the time and giving everyone a sense of how things really are.